December 23rd, 2025, 8:51 p.m. Eastern. Silver hits 72.63 per ounce. A new all-time record high, the highest price in silver's entire history. And the countdown to $100 just shifted from theoretical to mathematical. Because $72 isn't just another number. It's the confirmation that we're watching Hunt Brothers 2.0 unfold. Except this time, there's no Nelson Bunker Hunt chartering Boeing 707s, no Herbert Hunt flying silver bars to Switzerland, no visible billionaires the system can target. This corner is invisible, institutional, and it's already further along than the Hunts ever got. Let me show you why $72 changes everything. What the pattern tells us about the path to 100, how fast this could move based on historical precedent, and why the parallels to 1979 aren't coincidence. They're confirmation that someone learned the lesson the Hunt brothers taught 45 years ago, and they're executing it flawlessly. Start with what just happened. Silver hit 72.63 on Tuesday, December 23rd, up 280% in a single day, up 145% year to date. The strongest annual performance since 1979, yes, 1979, the year the Hunt brothers launched their corner attempt. The year silver went from $6 to $50 in 12 months. And here we are, 46 years later, watching silver gain 145% in a single year. The rhyme is deafening. But here's what makes $72 the critical threshold. It's not about the nominal number. It's about what $72 represents relative to resistance levels, supply constraints, and the psychology of triple-digit pricing. Silver spent 45 years trapped below $50. From 1980 to October 2024, it couldn't break the Hunt brothers' $49.45 peak. Every rally failed. 2011 hit $48, crashed. 2020 hit $29, faded. The 50 level was a psychological and technical ceiling that killed every bull market for nearly half a century. Until October 2024, when it finally broke. And once it broke, the move accelerated. $60 fell in December, then $65, then $70, and now $72. Silver is in price discovery mode. There's no historical resistance above 50. No level where selling appears because traders remember getting trapped before. The path from $72 to $100 is open air. And based on current momentum, that path gets covered fast. Let's do the math. Silver started 2025 around $24 per ounce. It hit $72 by late December. That's a $47 gain, a 196% increase. Now we're $29 away from $100. If silver maintains even half its 2025 momentum, $100 gets reached by April or May 2026. If momentum accelerates, like it did in the Hunt brothers' corner from September 1979 to January 1980, $100 arrives by February. The fundamentals support this. Silver faces its fifth consecutive year of structural deficits. Annual demand at 1.16 billion ounces. Annual supply at 1.035 billion ounces. Deficit of 125 million ounces every year. That deficit gets filled from above ground inventories. But those inventories are at critically low levels. COMEX registered silver sat at 138 million ounces on December 1st. Then 47.6 million ounces were claimed for delivery in the first 4 days of December. That's 34% of registered inventory demanded in 4 days. London Free Float is estimated at 135 million ounces by TD Securities. Shanghai inventories fell below 446 tons, the lowest since 2016. And China just implemented silver export restrictions on January 1st, locking down 15% of global supply. Industrial demand isn't slowing. Solar consumed 232 million ounces in 2024. Electric vehicles, electronics, data centers all require silver. These aren't cyclical demands. These are structural, locked in by government mandates and technology requirements. And mine production, flat. 813 million ounces in 2025, up just 2%. The supply can't respond. And when supply can't respond but demand keeps growing, price is the only balancing mechanism. Price rises until industrial demand gets destroyed or recycling surges. Neither's happening at $72, which means prices keep rising. Now let's talk about the Hunt brothers parallel, because the similarities are striking. In 1979, silver started the year at $6.08. By January 1980, it hit $49.45. That's a 713% gain in 12 months. The Hunts accumulated 200 million ounces. They controlled 69% of COMEX silver futures. They drained COMEX inventories by taking physical delivery. They created supply squeeze through concentrated buying. And they drove prices from $6 to $50 before the system intervened. COMEX changed the rules. Silver Rule 7 banned new speculative long positions, forced the Hunts to liquidate, and prices crashed 78% in 2 months. But here's what you need to understand. The Hunt brothers proved the concept. Silver can be cornered. Supply is finite. Concentrated buying creates exponential price moves. They made it to $50. They accumulated 200 million ounces. They generated $4 billion in profits before it collapsed. The only reason they failed is because they were visible, because COMEX could target them specifically, because the system knew who to stop. And now, 45 years later, silver is repeating the pattern. Except this time, there's no visible target. No two Texas billionaires COMEX can ban from trading. The modern corner is institutional, hidden across entities, jurisdictions, and structures. And it's already at $72, 43% higher than the Hunt peak before adjusting for inflation. If you adjust the Hunt brothers' 49.45 peak for inflation, it equals roughly $185 in 2025 dollars. We're at $72. That's 61% below the inflation-adjusted Hunt peak, which means that either silver is undervalued relative to history, or the Hunt corner was pure manipulation with no fundamental basis. The data says it's the former, because the structural case for silver is stronger now than 1980. Industrial demand is double what the Hunts faced. Supply is tighter. Above-ground inventories are lower. The fundamentals justify prices far above $72. And unlike 1979, when inflation fear drove silver, today's move is backed by real supply deficits and industrial consumption. This isn't speculation, this is mathematics. Here's the timeline based on pattern recognition and current momentum. December 2025, silver at $72. The breakout is confirmed. January 2026, China's export restrictions activate. Supply tightens further. Silver tests $80. February-March 2026, COMEX inventories fall below 100 million ounces. London float drops below 100 million. The squeeze intensifies. Silver hits $85 to $90. April, May 2026, solar season begins. Industrial buyers panic. Investment demand returns as retail realizes the shortage is real. Silver breaks $100. June 2026 and beyond, price discovery above $100. Media coverage explodes. Retail floods in. The move accelerates toward 120, 150. The path is open because there's no resistance, no historical ceiling, just supply exhaustion meeting inelastic demand. The risks to this timeline are minimal. Could the Fed hike rates aggressively? Unlikely. They just cut 3 times. They're signaling patience. Could industrial demand collapse? Only if the economy enters severe recession, which destroys solar, EV, and electronics manufacturing. That's not the base case. Could new supply appear? Not in 6 months. Mines take 7 to 10 years from discovery to production. The supply response is locked out until 2030 or later. The only real risk is COMEX or London changing the rules like they did in 1980. Imposing position limits, banning physical delivery, forcing cash settlement. But that would destroy confidence in paper-silver markets. Prove they're fractionally reserved. And accelerate the flight to physical, driving premiums to 100, 200% over spot. Either scenario, rule changes or no intervention, silver goes higher. And here's the part nobody's discussing. The Hunt brothers failed because the system intervened. But what if the entities cornering silver today are the system? What if the accumulators are institutions so large, so embedded in the financial structure, that regulators can't target them without collapsing the market? What if the modern corner is vulnerable to COMEX rule changes because it's not concentrated in 2 names? It's spread across dozens of entities, sovereign wealth funds, central banks, investment firms, mining companies, refiners, all accumulating, all holding, all positioned for exactly this outcome. The system can't stop the corner, it can't see, can't identify, can't isolate. And by the time it becomes visible, by the time someone realizes inventories are gone and prices are at $100, it's too late. The corner is complete. The countdown to $100 started at 72, not 50, not 60. $72 was the confirmation level, the point where the pattern locked in, where the parallels to the Hunt brothers shifted from interesting to undeniable, where the mathematics said this isn't stopping until supply exhaustion forces repricing. We're $29 away. At current momentum, 4 to 6 months, maybe less if a catalyst appears. A major bank failure, a geopolitical shock, a COMEX delivery default. Any trigger that exposes the fractional reserve nature of paper-silver markets. And when $100 breaks, when triple digits become reality, the psychology shifts. Silver isn't a commodity anymore. It's a monetary crisis, a supply crisis, a signal that the paper markets were lies all along. And the move beyond $100, the acceleration toward $150, $200, that's when the real Hunt brothers comparison becomes clear. Because they made it to $50 before the system stopped them. We're already at $72. And this time, there's nobody to stop. Now, if you're wondering how the Hunt brothers actually pulled off their corner attempt, how they accumulated 200 million ounces, why they chose silver, what went right and what went catastrophically wrong, when COMEX changed the rules, and Silver Thursday crashed the market 78%. In 2 months, I've got a video that breaks down the entire story. The billion-dollar profits, the Boeing 707s flying silver to Switzerland, the Saudi princes who joined them, the $1.7 billion loss, and the lesson modern accumulators learned from watching it all unfold. Watch that next. Because understanding where we are now, at $72 with $100 in sight, requires understanding where we've been. The Hunt brothers proved silver can be cornered. They showed the path. They paid the price for being first. And someone studied what they did, learned from their mistakes, and is executing the same strategy right now, quietly, invisibly, successfully. The countdown to $100 started at $70. Find out who's been counting down for years. Watch the Hunt brothers video next.